A very good evening to you all, friends. I'm Sanjeev Singhal, Chairman of the Auditing and Assurance Standard Board and a Central Council member of ICAI. I welcome you to this 133rd program of AASB for this council year. I joined for a very special purpose. This webinar, when we have planned on the EQCR and SQC1, this was to be taken up by CA B. Ganesh. And as destiny would have it, we lost him yesterday morning. I wanted to speak about the contribution of CA B. Ganesh, and then I'll talk about the topic. B. Ganesh has been a co-opted member of the Auditing and Assurance Standard Board and a very esteemed member of the profession. He addressed hundreds of programs for the Institute of Chartered Accountant of India, and he was very, I'll say that professionally very active, very fit person. This news came as a shock to all of us yesterday, and but probably that's what God wanted. He has been contributing extensively to AASB as well as on the webinars, and so I didn't want to cancel this program. I thought that let this program be dedicated to CA B. Ganesh, and we requested Pritesh Aminji to take this session. So Prateshji, thank you for agreeing to take this session. This becomes a very special session for all the members because you are an esteemed member and you are filling in the shoes of a dear friend who was a friend of the profession and friend of ICAI. And of course, as far as the topic is concerned, we all understand that this audit quality is of paramount importance. All the regulators, the government, all the stakeholders want audit to be of the highest quality. And in case of listed entities, the work is to be reviewed by another auditor who is called Engagement Quality Reviewer. So this webinar will focus on these two topics. And I will be requesting Prateshji to take up this session and explain it in simple terms. The importance of having SQC documentation in place, the importance of having an EQCR because that is a mandatory requirement, and how diligently the EQCR needs to perform its role. These are very, very important aspects because recently NCLAT has also said in an order that if it is not documented, it is considered as not done. In fact, there is an old saying in Hindi, "Pehle likh fir de, bhool pade to wahi se le," that first document and then give, so that in case there is an error, you can always draw upon the accounts. You can rely upon on the accounts. So with this objective, this webinar has been kept today. And I may now request CA Pritesh Aminji to kindly deliberate on the topic. Thank you, and over to you, Pritesh.
Thank you for the generous invitation. And my condolence to the bereaved soul. We would be missing a great stalwart in the profession on account of that. I do not know him personally, but I would assume he would have made a lot of contribution. And it's a big thing to fill in at the last moment for this one. I try and do justice to it to the extent that I can. So probably the session will be a little shorter than what you would have expected otherwise. I may complete by 1.5 hours or so, but I try and give the sum and substance of both the steps so it becomes relevant for us. And like the chairman mentioned right now, that NCLAT has said work not documented is not done. This was the same, and this was an accepted practice across the global firms, and to a great extent even in India, that work not documented is not done. So your work should speak in the documents. And again, like he aptly said in Hindi, right? So पहले लिख फिर बाद में देने का, और वहां से आप पकड़ सकते हो भाई the okay. So building on that point and moving forward, Now, you have an idea of what NFRA is into, and you probably have read NFRA orders also. So NFRA orders go into the engagement quality, right? They also go to the quality at the firm level, the structure, standard and quality control that the firm implements or applies, right? To ensure that the engagements, not the single engagement, but all engagements across are of a appropriate quality. Now, what is quality? How is quality defined? We'll come to that in some time as such. And especially and particularly an engagement quality control reviewer. I'm sure you would have seen orders where the engagement quality control reviewer has also been implicated, right? By virtue of not doing a proper work. It's not just the engagement partner, it's also the other partner or other qualified individual, which may be the EQCR, which may be an external qualified person, which may be internal, but nevertheless, those people are also implicated have, in terms of what have they done to ensure that the quality is adhered to, right? So let me go ahead. I don't have a presentation ready out here, but I will make through by this. But there's a good amount of material which Institute has already put up. Let me give you a reference of that material out here. First and foremost, you can refer to background material on standards for trading purposes, which ICI has come up with, and it is available freely on the website, ici.org website. If you go to free download publications, you'll see background material, right? Which was, I think, put up probably in 16, 17 or so. It's a very good material, which is across the board, freely available, and it's put up in the form of a presentation or PPT, right? It summarizes all the main points out there of the standard. I'm sure there's no substitute for reading the standard by itself and understanding the standard and applying and implementing it. But nevertheless, to revisit your knowledge, then there are also MCQs with the ICS put up, where you can test your knowledge across all standards, all EQCS, engagement quality control standards, SQC1 to SA200 till the very end. So there are many MCQs which are put up. So MCQs are always good, for testing, understanding as to where we stand in terms of our knowledge base, and we can also give it out to our team also. So we can ensure, or we can at least gauge and assess as to where our team stands and what are the areas that we need to focus or concentrate on, right? So, like I said, the background material, then there is the MCQs, then there's also a revised referencer, which summarizes the standard probably in 4 or 5 pages. Most of the standards are summarized in short form. Okay. Again, let me reiterate once again, this is not a substitute for reading the standard. Okay. You need to read the standard, but you can use these tools, the shorter summarized versions, right? To on an ongoing basis once you read the standard up, understood it completely. Then there are tools which are put up, like implementation guide to SQC1. That is also available on the website. That implementation guide was put up somewhere way back in 2009, uh, when SQC1 was also revised, right, in 2009. So that is when the implementation guide was also made available. So it gives out how a practitioner can actually apply and implement SQC1 and be compliant with it or be adhering to it, right? So like I said, again, to reiterate once again, background material, right, on training. Those are all standards put together in PPT form. So that is one. Revised referencer, rather, ready referencer, MCQs available for all standards, and fourth, okay, like I mentioned, the last one, which is to say implementation guide for SQC1. There are implementation guides for other standards also, but as far as I am aware, there's no implementation guide for SA220 as such. But it gets covered to a great extent in SQC1. So let me start off with SQC1 in the first instance. The topic, the name itself, is a quality control for firms that perform audits and reviews of historical financial information and other assurance services and other related services. Okay. So as you are aware, we have the Chartered Accountants Act, the Code of Ethics, and other ICA pronouncements. Below that, we have the SQC1, Standard on Quality Control, which is applicable across all categories of standards, all classes of standards, standards on auditing, standards on assurance engagement, standards on review engagement, and standards on related service. So these are the four subclasses as such, right? So on top of it, you have the SQC1. Now SQC1, again, the name, quality control for firms that perform audits and reviews of historical financial information, services, and related services engagement. Okay, so you get SA, which is audit of historical financial information, SREs, which are standards on review engagements, SAEs, which are standard on assurance engagements, and fourth, SRS, which is standards on related services. So that's how it is as far as series is concerned. Okay, and SQC1 was made effective and applicable from April 1, 2009. All the other standards, in fact, came in 2010, 2009, 2017. Some got revised later under the Clarity project and everything else also, right? But 2009 onwards, April 1, 2009 onwards, SQC1 is applicable. Okay. Now, going back to SQC1, there are 6 elements to SQC. What do you see quality control? What do you say is a quality control? Okay, what are the aspects or elements of a quality control? So that the broad at the firm level. So there is one at the firm level, practice level, engagement level. Here are the engagement level currently. Engagement level, you got standards. Standards on auditing, standards on review engagement, standards on assurance engagement, and related services. So those standards take care at the engagement level. SQC1 takes care at the firm level. How does the firm ensure that quality is addressed, adhered to, implemented, and actually comes out accordingly, right? So 6 elements, broad 6 elements. I go into details of it individually, one by one. But first, let me list down the 6 elements. One is the leadership. First and foremost, leadership. Again, as the standards name suggests, these are standards for quality control, okay, where you're auditing or reviewing historical financial information or an assurance engagement or related services. It does not cover consulting, it does not cover M&A or transaction advisory, whatever you may name as such. It doesn't fall into those classes that I just talked about, right? So it only covers what is in the 4 classes, subclasses as such. So again, when you look at SQC1, first and foremost, leadership responsibilities for quality within the firm. Okay. Now, let me give you an example. There could be a mid-sized to a large-sized firm where you could have different verticals in terms of service lines. You could have audit and assurance typically. You could have tax. Like tax also could be further subdivided into international or rather direct and indirect in the first instance. Direct could be international, could be domestic, could be further subclassified into appeals, assessments, whatever you may name it. You may structure your organization accordingly. You may have amended. You may have corporate laws compliance division also. You may have many other divisions and service lines accordingly. You may have an IT side of it also. You may have a legal side of it also, right? You may have anything. Could you hello? Am I audible? Can anyone respond and confirm this?
Yes, sir. Yes, sir. Yes, sir. Now it is fine.
Okay. Somehow it appears that probably I was lost in between or it was intermittent. I was cracking up, as I understand. So I'm not sure where I should start from, but let me briefly repeat myself. right from the beginning, very briefly. Okay, there's a standard on quality control. That standard on quality control is applicable to those firms which are typically an audit and assurance function. If you don't have an audit and assurance function, then this SQC1 is not applicable. Though you may be a CA firm as such, you may be in mergers, transaction advisory, consulting, or the like, but then this would not be applicable. But where you have a firm which has an audit and assurance function, or you practice in that service line, then this SQC1 is very relevant. So I was just trying to give an example that let's talk about a mid-sized to large-sized firm where there are different verticals, right? And there are people also who are organized accordingly in different verticals and departments, so to speak, or divisions, so to speak. You may now name it as you want, as such. There could be a audit and assurance department or a service line or a vertical, so to speak. There could be a what do you say, corporate loss consulting. There could be management consulting. There could be mergers and acquisition transaction advisory. Right. There is a tax angle. Tax could be further subclassified or divided into direct tax, indirect tax, which could be further subdivided into international and whatever you may want to. Right. So there are many subdivisions which are possible, many service lines which a CA firm can get into. Right. Typically, a mid-sized to large-sized firm has or have people who are looking at specific service lines. They, after a particular point in time in a critical mass, there are people who identified with a particular service line and they don't stray across all the service lines. And even where they do, this SQC1 would be applicable if they were to stray or strag along audit and assurance as such. Right? So if you are into audit and assurance and the related services, then SQC1 is very relevant. So SQC1 has 6 major elements. So I will go into brief the elements, first instance, the name of the elements, and then into a certain detail about it. Okay. The first and foremost is leadership responsibilities for quality control within the firm. So as the name suggests, who is going to be responsible for the leadership in terms of ensuring that the quality is maintained, adhered to, and delivered as per the firm's quality control policies, or at the bare minimum as required by the standards. Okay, you can obviously go beyond, but as minimum as required by the standard. So who is responsible? So I was trying to give an example where there's a firm which has an audit and assurance vertical, which has a tax vertical, direct, indirect tax, transfer pricing, international, whatever you may name, right? Then you got, let's say, mergers, acquisitions, you got corporate consulting, you got management consulting. So you got 5 divisions. And the managing partner may be an audit partner, may not be an audit partner. Maybe a partner who's practicing an audit assurance, or may not be the case. So in that case, would that partner be responsible? Because the vertical line would also be headed or led by a particular partner or person as such, right? So if that head of audit and assurance is the same as the managing partner of the firm, then it is easier. We know that they are, it's one and the same. So the responsibility lies HOD head as well as the leadership. But where the leadership is from other function, other service line, not audit and assurance, nevertheless, they are responsible for the quality. Okay. They are required to ensure that the quality standards or the quality control, quality requirements are adhered to as per the auditing standards or as per the standards on quality control first, then the standards as applicable to the type of work or engagement that you are into, right? So they are responsible. They cannot get away with it. How they can go about ensuring that they've adhered to, maintained it, complied with it, we'll get to it in some time. That was the first element, leadership qualities or leadership responsibilities, right, for quality control within the firm. Then you got second, the ethical requirements, which also includes independence, which also includes conflicts of interest. Okay, so ethical requirements, as we are aware, there are many threats that we have identified as a firm, as a profession, as a self-review threat, self-interest threat, advocacy threat, and the like. There are 6 threats which have been identified. So how do you address all of that? Then how do you ensure compliance with the code of ethics, right? So all of that comes in the ethical requirements. So quality control, again, leadership responsibilities, who is responsible for it? Ethical. Then you got client acceptance and continuance, right? This is one of the important elements in actually running a firm, assessing risk and taking on those risks. Okay. First and foremost, your risk starts from the time you accept a client or you are looking at accepting a client as such. Okay. So that is where the first risk element comes in. Risk in the financial statement at the associate level, that comes in later. Okay. So first and foremost, it is client acceptance and continuance process. So how good are those processes? Okay. So in order to maintain quality, if you are going to get a bad person, you're not going to have a good deal from a bad person. That's what I typically get into and tell everyone. See, if you're going to get in bed with criminals, sooner or later, even if you're not doing anything wrong, you know, it's going to reflect on you to a certain extent, and you're going to get into it to that extent, right? So first and foremost, it's client acceptance and continuance. That is important. Okay. Thereafter, there's human resources. How do you ensure that you get good people with the capability, the commitment, and the competence, right? You need all of that to ensure that the quality is maintained. Because at the end of the day, most audits, be it to large size, is a part of it's being executed or done by an engagement team. The team may be very little as 2 persons or 3 persons, as a case may be, or it may be a very large team, multi-location team. It could be a single location, but nevertheless, typically you would have to rely on people to get the things done, right? So human resources, that for that matter, even a partner, when they are going up and escalating as a, or being taken in as a partner, the capability, competence, and commitment comes in first angle, then the staff out there. Okay. So human resources. And how is the engagement team assigned to any engagement? That is an important element. Okay. Then there's engagement performance. Okay. Finally, again, to reiterate, you've got the leadership responsibility, ethical requirements, human resource. Then you've got the engagement performance. So engagement performance, typically you talk about consultation process, you talk about the differences of opinion, right? Then you've got engagement quality control review. That is what we are going to talk about specifically even later in this session, right? Which is SA220, as well as it gets covered broadly in the SQC1. Then there's engagement documentation. Okay. The engagement documentation at the broad level, at the firm level. How do you ensure that the engagement is properly documented? At the each engagement level, there's an SA230 which will take care of. At engagement quality control review, at the engagement level, there's an SA220 which will take care of. Right. And the quality control requirements at each engagement is taken care of. If it's an audit of historical financial information, by the SS. If it's a review, then by SREs. Okay. So I talked about 4 elements. The fifth element being monitoring, right? How do you monitor once you lay down all the quality control policies? Okay. How do you ensure that this is being actually implemented, adhered to, complied? Okay. So how do you monitor that? You just can't say I have a policy document and that's it, done with. We all understand this because there's no dearth of policy documents being available. The actual implementation is an issue that needs to be tracked. Okay. So after that, we go off to documentation. Documentation of the firm quality control processes, not the engagement documentation, right? Engagement documentation, we already looked at engagement performance. That's briefly covered out there. So it's the documentation for this one. So reiterating the 6 elements: leadership qualities, leadership responsibilities for quality control within the firm. Then you got ethical requirements, which includes independence. And the third, you got human resources, right? The type of human resource which you have. Then fourth, you have got engagement performance. Fifth is monitoring. And sixth is your documentation of this firm's policies. Okay. I'm sure many of you have gone through the peer review process, or you may be a peer reviewer. You may have been a practice unit if you're auditing a listed company, right? So you would have gone through the process and you would already know, you would have implemented the quality control policies, you would have documented it, you would have also submitted to your peer reviewer as such. Now there's one more framework which the institute has come up with, is the EQMM. It's more of a tool to assess where you are, right? What is your audit quality? Okay, it doesn't cover other assurance engagements and related services, but it's a audit quality. So typically, it covers audit and review as such. But so it's a tool which is made available to you in terms of questionnaire or a checklist, to so to speak, to assess in terms of point scale, right? As to where you are, the points will indicate to you how good it is, how or where it needs to be improved. Okay, so that is AQMM. We are not looking at that tool specifically out here, but we are looking at SQC1. So now, having talked about the 6 elements, let me go off to the responsibility. It is the firm's responsibility for quality. Okay, firm's responsibility for setting up a system for quality control. Individual partners' responsibility to ensure that is adhered to. Okay, so let us get that clear. For what? For audits and reviews of historical financial information, other assurance and related engagement services. Like I said, it is not applicable for tax. It is not applicable for transaction advisory, corporate finance, due diligence, mergers and acquisitions, right? Management consulting, corporate laws compliance, and all those. Okay, this is applicable to audits and reviews, assurance engagements, related services. So the SAs, SRS, SAE, and SREs. Okay, it's applicable to the firm for setting up a system of quality control. Quality control at the engagement level is taken care of at the SA level or the SRE level as such. Okay. Now parameters. This SQC1 is under, first and foremost, the Chartered Accountants Act 1949, the Code of Ethics, regulations, relevant pronouncement, and other relevant legal and regulatory requirements. Okay. There could be legal and regulatory requirements also which you may need to take care of in terms of your firm's control policies. So as to speak, there may be SEBI requirements, there may be RBI requirements, depending, okay, what type of engagement it is. So there may be specific requirements by different government authorities, regulators, statutory bodies, as the case may be. So that also will have to be factored in when you're setting up a firm level control policy or control system. Okay. So first and foremost, like I mentioned, so these are the parameters which you need to consider for setting up this one. Then again, system of quality control. All firms have to apply this. There is no exemption or waiver available for a small time firm or a sole proprietor of that sort. It is applicable across all the firms which are into audit and assurance services. Assurance, I mean to say assurance, other assurance, related services also including there. Okay. So applicable across all. It doesn't matter whether you're sole proprietorship, small time firm, small firm, right? Large size firm, mid size firm, it's applicable to all. It is applying to firm and the personnel to comply with professional standards, regulatory and legal requirements. It is applicable to all reports issued by the firm. Okay. All partners are appropriate in the circumstances. That's how it is typically worded. That ultimately your deliverable is in the form of a report. So that report has to be compliant, okay, and is appropriate in the circumstance. Appropriate meaning to say it complies with the quality control policies as such. Those quality control policies will obviously take care of your engagement related standards also. Okay. So now there are certain definitions which you have to be mindful of when you look at the SQC1. There's engagement documentation, there's engagement partner, there's engagement quality control review, engagement quality control reviewer. Okay. Review is the process, reviewer is the person conducting that process. Then there's engagement team, firm, inspection. These are some of the words, key words in this SQC1, which I am actually, just mentioning out here. Listed entity, monitoring, network firm, network, then this partner, professional staff, okay, professional standards, reasonable assurance, all of that staff, and suitably qualified person. I'll not go through each and every definition. I'll cover or get into those definitions which I think are more relevant. But these are some of the key words that you may need to keep in mind. Okay. Now, definition wise, engagement documentation, we all understand it's a record of the work performed, the observations, and the conclusions reached, right? So, and it is assembled for each engagement in the engagement file. That is what engagement documentation is all about. Who is an engagement partner? Partner or other person in the firm is a qualified member of ICI in full-time practice, right? Is responsible for the engagement and its performance, is responsible for the report issued as such, or has appropriate authority from professional legal regulatory body. These are the five elements. Okay, what and who is an engagement partner? Can there be two engagement partners and all those? That is there available in the FAQs. There has to be one engagement partner per se, who's the final authority responsibility. You can have other partners working for you, working with you on that engagement, right? They may be the first level, you may, but finally someone has to take the responsibility for it. So typically, what NFRA has also come out in their orders, this has been a subject matter of discussion as far as ILFS audit was concerned. When they went into the review of the work of those auditors, how many engagement partners can they be? Can they be only one? They can be two or so. All has been brought in at that time, right? And when you file an NFRA form and all those things also, there are FAQs which you can look at. But typically, what I'm talking to you is engagement partner. Then engagement quality control review. This again we'll be covering it as the engagement level subsequently, but broadly engagement quality control review. Again, what do you do? What is the process supposed to be? It is to provide an objective evaluation before a report is issued. Okay, for significant judgments and conclusions reached by the engagement team in formulating the report. So it's basically an objective evaluation. It's a person who is different from the engagement partner or the engagement team itself. Okay. And that person should not be involved on that engagement in whatsoever manner. You can have consultations, but if it is too deep or significant consultations, then you run the risk of losing that objectivity. Okay. So then you'll have to take care of. But generally, it is understood that engagement partner would be signing off on the audit report or the report which is to be given out, depending on the review report or as the case may be. Engagement quality control reviewer would be a person who's separate and distinct from the engagement team and who is not working on the engagement as such. Okay, other than their work as an EQCR reviewer. Okay. Now, who's an EQCR reviewer? Who can be an EQCR reviewer? Let's get into that. Typically, a partner or other person in the firm, right, who's suitably qualified. Now, what is suitably qualified? We'll look at that. With sufficient and appropriate experience and authority. Typically, what happens is a senior partner will give it to maybe a junior partner. They may lack the experience, may they lack the authority to question, to challenge, to bring up issues. Possibly may not, right? So, but typically, if it's a senior partner giving it to junior partner of EQCR, the aspersions would be cast accordingly, and you'll have to look at how to get out of it in that sense, right? By adhering to what is required as such. To objectively evaluate and significant judgments and conclusions read. A person who can actually evaluate judgments taken by someone else, the engagement team, the conclusions reached, right? The process by which the audit has been conducted, whether the risk assessment was done, whether the planning was done appropriately, whether materiality was set up appropriately, whether the misstatements were evaluated appropriately. All of this comes in, right? So, and this is all done before the report is issued. In fact, the report cannot be issued till the engagement quality control reviewer gives a go ahead to issue the report. That's how it is. Okay, that's how it's supposed to work. Just like any other product which has to go through a quality assurance and quality control, there's a quality control process. Only if and when they give a go ahead can that product be shipped out, right? Otherwise, that will be pending, subject to repair, right? If it's a defective item, can you rework on it? Okay, that's how it is. So if the engagement quality control reviewer comes up with some points which he thinks the engagement team needs to address, or it's not been addressed in sufficient detail, okay, or wants them to get into further more details, then he or she will give them instructions to do so or indication to do so. Okay, so that's how it is. So quality control team to be led by a CA. You can have a quality control team. It does not necessarily mean it has to be just an individual. It can be a team, but the team has to be necessarily led by a chartered accountant. It can't be a non-chartered accountant as such, who is a member of ICA, obviously. No, do not need to say any further. Engagement team. Now, who's an engagement team? All persons working on the engagement or performing the engagement. Who is this? Obviously, the partner involved, the staff involved, the personnel involved, even outside experts working on that engagement, working on a part of the engagement, okay, would get covered as a part of the engagement. So you could have got outside actuaries working retained by the firm. You could have valuers, right, or retained by the firm for valuation purposes. So all those are experts used by the firm. So those outside experts would also be covered in the engagement claim. Right. What does it or who does it exclude? It excludes individuals within the client which are internal audit department or function or or division. Because typically as per SA 610, you can rely on the internal audit work division or could be external firm also. But typically, if it's an internal audit firm, you could rely on that. Anilji, could you just confirm if I am audible and visible? Or anyone, please confirm. I just got a message my internet is unstable. So that is why I'm just trying to confirm that. Hello? Let me just connect with Mr. Anil. Okay, fine. Now, because my internet message gave me it's unstable. So I just wanted to recheck and confirm. Okay. So, okay. So moving forward from there, the engagement team, like I mentioned, all person, partner staff working on the engagement, performing the engagement, outside experts, okay, are also included. Only which is excluded is internal audit function of the client whose work you may be using in your work. Those people are excluded. Those cannot be regarded as a part of your engagement as such. Firm, it could be a sole proprietorship, partnership firm, or any other entity of professional accountants permitted by law. Corporation is not, so it is not covered. Inspection, right? Inspection is important when you're monitoring. So we'll come to that at that time. But inspection can happen only for completed engagements, and the procedures are to be applied on the audit engagement team more than the audit engagement as such. You're applying whether they have complied with the quality control policies or not. Okay. Monitoring, that's one of the elements of SQC. So what is monitoring? Briefly to state, it's a process, obviously. It's considering and evaluating the firm's quality control policies on a periodic basis by selecting certain engagements, okay, completed engagements to speak, and to get reasonable assurance of operating effectiveness of the quality control policies being implemented and are being are effective. Just like you in IFCR, right? We are doing an operating effectiveness test. One is a design test, the other one is operating effectiveness test. So monitoring is basically operating effectiveness test of the firm's control policies. Network, firm network, I'm sure you all of us understand. If you are in a network, then what are the quality control policies of the network that you are supposed to implement as a firm, as a local firm, as a uh, networked firm as such, right? Partner, any individual, authority to bind the firm. That's a partner. Person includes both partner and staff. Staff is separately defined. Okay. Now, elements of SQC1, again, let me get into it. Leadership responsibilities. Like I mentioned earlier, the managing partner is actually responsible for the quality control within the firm, within the audit and assurance vertical, division, department, whatever you may want to term it, right? Irrespective whether that managing partner is from audit and assurance function or any other function, they are responsible for it. And their responsibility is just not limited to, you know, forming up the head of the department. It goes even beyond. Okay, I just can't say if I am the managing partner that I have selected the head of department for audit and assurance and my job is done. That person is responsible for quality control now. Once I had done that, okay. So that is what SQC1 tells you how to go about it. Okay, it's formed to design policies, procedures. It may be worked on by many individuals, many people. The probably the head of audit assurance may give the maximum inputs. The audit assurance may give the maximum inputs. It may not necessarily originate, or emanate from the managing partner, right? But the managing partner is still responsible to see and ensure that the standards under audit and assurance or beyond for quality control are adhered to. So they will necessarily have to get into it even otherwise. The basic engagement levels, standards, and all, the audit partner can get into it, the head of audit can get into it as such. Okay. So again, the tone at the top matters, the managing partner. How do you communicate your quality control policies? How do you emphasize the quality, right? Across to all the teams. How do you train the people? All that is an important element. Okay. So how do you ensure that you comply with it? You come out with the proper reports, the appropriate reports in the circumstances, right? Then how do you recognize and reward high? Once you laid down the quality control policies, you communicated them, you monitored them, but how do you actually recognize and reward high quality work? Then only will it change. Okay. The carrot and the stick approach, basically the pressures and the incentives. So how do you incentivize that trait or characteristic or behavior as the case may be? Okay. So that is the part which we are looking at. So leadership responsibilities, communication, I just talked about it. Communication right from the top to beginning. It could be the head of function also that you're communicating to. It could be the team members. It could be everywhere across. Communication could be through training, seminars, meetings, formal, informal meetings, right? Could be mission statements, newsletters. The communication format and mode could be as varied as possible. So long as the message comes out very clearly about your focus on quality. Okay. It could be incorporated in the firm's internal documentation, the policies as such, appraisal documents of people. Every year you got an annual appraisal, half yearly, midterm appraisal, as the case may be. How do you emphasize quality? How do you incentivize and recognize out there? Okay. So leaders to recognize that quality precedes business objectives. Easier said than done. I am Most leaders definitely have a focus on quality control. Okay. And they are required to maintain that as per the ICI requirements also. And even generally by law and legal and regulatory requirements, it would definitely be their responsibility to ensure that. Okay. So you can incorporate in firm's internal documentation, training material. You could have it in appraisal documents. Okay. Leaders to recognize that quality precedes business objective, so to speak, in terms of revenue, in terms of profitability, and all those things. But this should precede that. Okay, you have to assign management responsibilities accordingly. Obviously, the managing partner is not going to get into it. So, management responsibility could be assigned to the head of function or to the audit partners, depending on the size of the team or the department you have. Then you should have your HR policies which demonstrate that you have focus on quality control. You're trying to recruit the right type of people. Okay, right type of people in terms of capability and competence, obviously, and other things we'll look at when we get to the HR element also. As when person, if you the managing partner is delegated the responsibility of quality control to someone, they should be reporting to the managing partner. Okay, because ultimately it's a managing partner who's responsible. So they just cannot be reporting to the head of function or anyone else. The managing partner is responsible. So you cannot delegate just means you can delegate tasks but not responsibility essentially. Ethical requirements is the second element. Ethical requirements across what are the policies and procedures that the firm has laid down to ensure reasonable assurance. Okay, that is what the ethical requirements are all about. Firm and person have to comply with ethical requirements at the firm level and the person. Like I mentioned, personal defines both, includes both partners and staff. Okay, it will also include outside experts whom you are contracted for work on an engagement. Okay, so fundamental ethical principles we all aware, but let me reiterate: integrity, objectivity, professional competence and care, confidentiality, professional behavior. Okay, these are the fundamental ethical principles. Uh, I'm sure all of us are aware of it, so I'll not, belabor the point out here. If anyone has a question on this, wants to look at this specifically, I'm more than happy to look at it later, right? When we have the time available, or you can contact me separately also, if the case may be. Okay. Or if there's a question which comes up, I will be able to answer that later. Then the fundamental principles which are enforced, right, by the leadership of the firm through education and training, through monitoring mechanism, and through the process for dealing with non-compliance. Obviously, once you lay down control policies, you also need to finally have a procedure for dealing with non-compliance. How do we deal with it? Typically, there's no laid down policy or process for it because they have a policy and process typically for monitoring. That's the extent to which they go. Okay, and they may have a blanket statement that any quality non-compliance will lead to a dismissal for employees typically. But what about partners? What about others? Okay, that may be in a partnership deal broadly. That needs to be laid down in the firm's quality control policies also. Okay, now ethical requirements, like I mentioned earlier, includes independence also. Okay, independence, we are aware of the review threats, the 6 threats that we are needing to mitigate. Okay, okay. So I'll move forward from there. Independence, again, establishing policies and maintain procedures to find out, determine, identify first and foremost any independence issues, any conflict of interest issues, right? So first and foremost, what is the firm's quality control policies? Now, many firms have typically tools available, which are online tools available, a database of clients which are being set up in those tools. So the minute someone is trying to accept a new client or trying to get into a new client, right, they will say that I'm trying to get into this. They'll do a background check, conflict check, they'll do an independence check, right? And the minute some client is accepted, that database is updated. So it reflects whether there's a conflict of interest, typically financial interest. Okay, is any other partner holding shares in those entities or not? There's a pre-check also before accepting the client, but it could so happen even after acceptance, there's a requirement of disposing of those financial interests and many others. I'm just giving you some examples of it. Okay, so how do you handle breaches? Once you have a policy and a process and a procedure to identify independence issues, then how do you handle those breaches or notify to the appropriate person for the action, for the resolution of the same? Okay. So how do you communicate as person, as partner or staff? How do you communicate independence issues, potential independence issues, conflict of interest? Okay. So all of that is getting covered in the ethical requirements independence out here. Okay. So I'll not belabor the point on this one because I'm sure this we are all aware and we are taking care of it. Let me move forward. Client acceptance and continuance. So the third pillar or the element rather. First was leadership, second was ethical requirements, and third is your client acceptance and continuance process. Like I mentioned earlier, that your risk starts from the client that you accept or continue, right? If it's a risky client right from the beginning, or it's a client with doubtful integrity, right? Or you have suspicion of integrity, then you need to know whether to accept the client, how do you accept the client, and how do you handle or tackle such a situation. I am not saying that you need to outright say no to a client. Okay. You may be willing to take that risk provided you're able to mitigate it. But you need to know right from the beginning what is the risk that you're taking on, right? What is it that you're getting in, basically. So that is this client acceptance and continuance as such. Okay. Again, policies and procedures. Many firms have laid down that. Now there are tools made available to you. There are obviously standards for that, and there are tools made available. Center for Audit Quality has laid down some tools in terms of client acceptance and continuance, and there are tools available. Even if you were to check, just do a Google check, you'll find out something. There's obviously auditing guidance available or made available by ICI in terms of for practitioners. That also gives you some guidelines in terms of a checklist as to what you need to consider, the factors that you may need to consider. Obviously, it cannot be completely exhaustive. There may be certain other points and factors which you may want to have to consider depending on the type of client or type of situation that you are getting into. Okay. So again, if there was an issue, how did you resolve it? All this needs to be documented. Typically, what happens is we do take on clients knowing fully well the type of risk that we are getting into. But many a times, what happens is it is not appropriately documented as to what was in your mind. You would have discussed, consulted, right, concurred with someone else, then gone forward. But nevertheless, that process is not appropriately documented for others to understand and see. And this obviously could be important, will be important when NFRA is getting into such things. NFRA typically has gotten into the engagement level standards in the first instance, but they have also pronounced on quality control to a limited extent in many of the firms. Okay. I'm sure they will get into quality control to greater extent going forward. So there are client integrity, the firm's capabilities to service the client, handle the client, to manage the client, to manage the risk. Okay. And there are ethical issues that you may want to mitigate, and professional responsibilities, legal, statutory, all of that will have to be considered. Okay. Again, acceptance, continuance, concomitant is also withdrawal from the engagement. Now you may have accepted a client, okay, depending your risk assessment may have been normal. But going forward, when you are actually into it, you find that it has become greater than normal or much greater than normal, and you are not wanting to continue any further for a particular reason. There could be factors, management integrity, fraud noted, or something, many factors. But I'm just giving certain example. If that be the case, then how do you withdraw from the engagement? Do you just plainly resign and get away with it? Right? So you can't do that, obviously. You can resign, but it has to be appropriately recorded. Typically, you would show a process of consultation, show a process that this has been discussed through. There was no other way for you to handle it, and this is how you want to go about it. So you need to be able to justify. Okay. So resignation, again, we all aware that engagement level resignations that SEBI also came across. Institute also put in a pronouncement saying how you can resign, right? It has to be recorded for what factors, what reasons. So there is a guidance note available on that. I may be getting my, what is it a guidance note or I think it's a guidance note. You'll have to forgive me if I'll probably be able to share the name with you subsequently or later. Okay. Then the fourth element, human resource. Leadership covered, ethical requirements covered. Then you got client acceptance and continuance covered, and the human resource. Again, human resource, what are the policies and procedures that you have to ensure that you get reasonable assurance? Now, reasonable assurance is obviously based on the people who are going to be on the engagement team. How do you assign an engagement team? Where do those people come from? Do they have the capabilities and the commitment and the competence to take care of such engagements? that you're assigning them to, right? Assigning is the first factor. Who does the assignment? Okay. Thereafterwards, the competence, the monitoring, the review, the supervision will come in, all of that. So the issues to be addressed by HR policies is one, recruitment. What type of people are you recruiting? Okay. Then there's performance evaluation. How are you evaluating and assessing them? What are you incentivizing? What are you uh, the carrot and the stick approach? What is unacceptable? What have you stated? What is your communication to them? Right. So career development path. How does a person grow in your organization? Is quality at most, or are there other factors which will lead to their growth? Okay. Obviously, as you move forward, we have many other production factors, revenue factors which come into picture. But quality is the first thing which is taken care of. That is presumed that when you get to a particular level, quality is already assumed to be taken care of. But do not assume, ensure that that is there. So that is what career development, promotion, how do you promote people? Okay. How do you compensate people, reward people, incentivize people? And estimation of personal needs. Are you properly staffed, appropriately staffed, short staffed? Okay. You may have got a good group of people, competent people, but you may be very short staffed to be able to execute and do a good job. Okay. So capabilities and competence, again, this can be developed through, it does not necessarily mean that you need to have a capable and competent person right from the beginning. You can develop it through. Okay. But you need to have a person assigned to an engagement who can actually deliver and perform the engagement. Okay. As is required, as by the standards. So are those competent people? There may be a case, let's say you are looking at a financial service industry client. Okay. NBFC, a small time NBFC. You may not have handled it earlier. It may be a real estate client. It may be an oil and gas client, right? This is a special industry. You may not have handled it earlier, but are you able to build up competencies, right, to execute and engage, to work on that engagement? Okay. If that is, then you are fine if you are doing that. Okay. So competencies and capability can be developed through professional education, could be external or internal within the organization, continued professional development also, right? Then work experience also counts for its capability and competence, and the coaching by more experienced staff. Typically, junior staff is tagged along with senior staff or assigned to a team, right? So who has a more experienced person out there, so they can train them. Performance evaluation, compensation, and promotion. Three things are typically attached together. How do you create awareness in terms of the incentives for the right behavior, disincentives for the wrong type of behavior or undesirable behavior, as the case may be. Evaluation and counseling with respect to performance, quality issues. Okay. So all these are policies and procedures that the firm has to set in the first instance. Then comes in the assignment of engagement. So once you get in the right people in, are you assigning the right people for the engagement? Let's say if it's an oil and gas client, or it's a banking financial service industry client, it's an insurance company. You got an insurance expert or a specialist rather, that a person who's worked on insurance industry earlier, was versus you have a person who's not worked on insurance and you're assigning a person who's not worked on it without any help, without any training, without any support, without any coaching. So that becomes unacceptable. So you had an insurance colleague or insurance industry expert or a prior experience expert. You should have ideally assigned that if you are not going to develop the other person. Okay. Example. I'm just giving examples. It could be many other things. Okay. So assigning the right type of people. It also means for listed entities. In this, some of the NFR orders, recent last October and November orders, if you look at it, there have been cases where there have been typically young people, young chartered accountants, probably 3-4 years of experience, who have been handled or been assigned listed entities which require some amount of experience, right? Obviously, that person would have developed, would have been able to, if the firm had provided the adequate resource, training, so that person would have come up to that level with supervision. But that issue has also come up in the NFR order. that the person had only 3 years of experience and was doing an audit of such a large entity with such complications, okay, which required significant more experience for it. So I'm sure it must be not, it's an October order, if not the latest November order as such. It's in the October order. Okay. So let me move forward from that. So assigning engagement team is not just industry expertise. It could be the size of the entity or the complications also involved and the person's ability. You can address that or mitigate that risk in various ways. You can train the person up. You can have that person consulting with a senior staff person, senior partner, experienced person. The experienced person can be supervising it, monitoring it, various ways. Okay. So assigning appropriate staff partner first instance. Okay. We looked at all of that. Fifth, engagement performance. The fifth element. Now, engagement performance is establishing policies and procedures again for obtaining reasonable assurance that the quality control policies of the firm have been adhered to. Right? So compliance with the professional standards, reasonable assurance that you're complying with professional standards, legal requirements, regulatory requirements. Okay. Engagement partner issues reports which are appropriate in the circumstances after meeting the standards, law and regulatory requirements, and it's still appropriate in terms of the reporting. Aspects to be addressed by those policies would briefing the engagement teams in terms of what are those policies, what are the matters, how it needs to be tackled and addressed and resolved as such, process for complying with the engagement standards, process of supervision, staff training and coaching. So engagement performance, we all know. Then there is engagement quality control review in that engagement performance. Okay. Supervision, monitoring, review, consultation, differences of opinion, how do you tackle them, right? Do you have an engagement quality control review process? Is the proper engagement quality control review addressed? All of this is part of engagement performance. Engagement documentation also. Assembly of the final audit file. Okay. No changes to the documentation. Confidentiality, safe custody. Okay. Accessibility of engagement documentation, documentation retention, documentation ownership. All of that comes in the engagement documentation and also a subset of the engagement performance as such. Again, there are specific engagement related standards also. And the sixth element, I'll get into the sixth element because I have already hit five as such. I'm just looking at my watch and probably 2:20, I'll spend some time on it. So let me get to the sixth element quickly. Separately, engagement documentation. Okay. So A, B, C, D, E, F, or 1, 2, 3, 4, 5, 6, as you may have it. Leadership, then ethical requirements, client acceptance and continuance, human resource, EQCR, engagement quality control review, and sixth is engagement documentation. Okay, these are the six elements or areas where a firm needs to set policies and procedures in place, okay, to ensure appropriate quality. Appropriate quality means complying with the standards, professional standards, complying with laws and regulations, and anything beyond to see that the report is reasonable in the circumstances. You may have complied with all, but the report may still say more, right? For various reasons for it. So that is the six elements that we are at. Now let me get to specifically engagement quality control review. I had not talked about engagement quality control review at detail as a part of the six elements right now, because obviously I'm taking it up separately, SA 220. SA 220 is at the engagement level. Has anyone questions so far, Anilji? Okay, I'll presume no questions as of now. And if there are questions relating to this topic, it can be taken up later also, right? So again, The elements monitoring is a part of it. Monitoring. Okay. No, I was asking, are there any questions so far which I can address? Because I am actually trying to get to SA 220 from SQC1 right now. So if there are questions so far, I can take it up right now or probably later at the end. Are there any questions? Yeah, if you can. Okay, please do so. So I'll just wait for it.
Sir, can you hear me, sir? Sir, can you hear me?
Yes, I can hear you.
Sir, I was just wondering, you will continue more presentation or we are winding up now? Pritesh, sir? Pritesh, sir? Pritesh, sir? Pritesh, sir?
I can hear you.
Rejoin. Rejoin. कटेंगे सर तो रीजॉइन करेंगे Sir, your connection got disconnected. सर अभी प्रेजेंटेशन आपका रहता है या और चलेगा अभी या कितना रहता है आधा घंटा ना सर क्वेश्चंस लास्ट में लेंगे सर जी जी क्वेश्चंस लास्ट में लेंगे आप प्लीज लीज ज्वाइन कर लीजिए थैंक यू आई विल रेज द क्वेश्चंस एट द एंड ओके सर ओके
Yeah, am I audible?
Yes, sir. Can you hear me, sir? Yes, sir. Yes, sir.
Yes, I can hear you. Sorry,
due to some technical glitch, due to the network issue, there was some issue. So kindly continue, sir. Questions we will discuss at the end, sir.
Fair enough. So we'll take that up at the end. Again, excuse me for my connection. It appears to be unstable today for whatever reason. It's it's the World Cup final sort of a thing. Unable to perform on the final day. It works well on the other days, but not on this day. So yes. Let me move forward from there. Please excuse my unstable connection out here. Okay. So I was coming to SA 220, the engagement quality control review standard. Okay. So let me move to that. The title, the quality control for an audit of financial statements. It's for an audit of financial statements. Okay. What is the role of EQCR? I'll talk to you briefly about it. There is obviously standard which you can refer to later and subsequently. Who can be an EQCR? Okay. All that I'll talk to. What is the scope of the standard? Broadly, it deals with the specific responsibilities of the auditor regarding quality control, procedures for an audit of financial statements. Okay. So first and foremost, it defines the responsibility of the engagement partner or the auditor for the quality control. Okay. At the engagement level. At the firm level, we already saw that it's a leadership at the firm, right? Top managing partner. They are responsible for it. Okay. Then at the engagement level, you got an engagement partner that is responsible for quality control. Now, engagement quality control reviewer, as I mentioned earlier, is a person who's separate from the engagement team, who has not worked on the engagement as such. He or she may have done it in the past, but not currently. Not to vitiate, the objective examination evaluation issue. right? If it is so current that they worked in the last year, and now you're asking them, you may still have questions. Okay, you may still doubt the objectivity. So it's better to avoid all such things to the extent possible. Okay. So first and foremost, the responsibility of the audit and the quality control at the engagement level is the financial statements. It's SA 220 is applicable for an audit of historical financial information, financial statement basically. Okay. Responsibilities of the engagement quality control review. Those have been specified in SA 220 as such. Again, this has to be read in conjunction with the other ethical requirements. This is not a standalone standard. This is a part of the other standards, other requirements as such. Code of ethics also, Chartered Accountant Act. So all those are at the top. Okay. SA 220 assumes that the firm is complying with SQC1. That is clear. You can't have an SA 220 in singularity when you're saying the firm has not complied with quality control policies, but at the engagement level, I'm complying, which will become unacceptable. Okay. You can't have a position of that sort where firms' quality control policies are missing. Okay. But at the engagement, I'm saying I have applied and implemented in that sense. Okay. So let me move forward. So it's a implicit assumption that SA 220 SQC1 is already being implemented, applied, adhered to. Okay. What is the quality control system and what is the role of the engagement in such a case? Engagement team as well as the engagement quality control review. Responsibility of the audit firm or the audit function as the case may be. I'm using the audit firm, but it may be an audit function within the firm as well. Implement the quality control system, obviously. For what purpose? To what aim? To obtain reasonable assurance. To what end? That the firm and its personnel comply with the professional standards, the legal requirements, the regulatory requirements, the statutory requirements, okay? And the reports which are issued by the firm are appropriate in the circumstances, okay, in which it is issued, okay? So this is the responsibility of the audit firm. Responsibility of the engagement team. What is the responsibility? Implement the applicable quality control procedures. Firm has already laid down the quality control policies and procedures. Engagement team is required to implement it. Okay. Then provide the firm with relevant quality control regarding independence. You are supposed to, as an engagement team, as a part of the engagement team, you are supposed to comply with independence requirements at an individual level. You are supposed to notify the firm of your interest, financial interest particularly, any other interest which may be in conflict, which may bring under conflict, okay, which may have independence issue, which you're supposed to notify, any other breaches and the like, right? So you're supposed to do that. Provide the firm with the relevant information to do so. So a firm has laid down policies, but there's a part where the engagement team has to provide in terms of information, in terms of communication, okay. Now, engagement team is entitled to rely, first and foremost. So, like I mentioned earlier, SA 221, 220, pardon me, SA 220, there's an implicit assumption that SQC1 is implemented. Okay. Now, when there's an implicit assumption, then engagement team is allowed to assume or entitled to rely that the firm's quality control policies have been adhered to, which they may not have any control over, which they may not have the right or the authority to have set also. Excuse me. Right? So they may not have set it, but they are entitled to rely on, which is in terms of, unless it is suggested otherwise, you can rely, if you're part of the engagement team, your partner, your staff, you're entitled to rely on the competence of the engagement team. Let's say partner in a big size firm, the audit and assurance function could also have multiple partners, multiple engagement team members, right? Multiple staff, could be multi-location. So engagement partner is assigned in the first instance. That engagement partner is assigned an engagement team, maybe of his or own choice, maybe assigned by someone else, maybe partly of their choice, partly assigned, as the case may be. But an engagement partner is entitled to rely on the team which is assigned by the firm based on its quality control policies, right? So then they cannot be faulted for it completely, unless they have reasons to believe that person is not competent. They know so. Have they indicated to the firm to take that back and replace it with someone, substitute with someone else? Right. So these are common sense basis. Uh, so independence. Again, as an engagement partner of a particular entity, you may not be knowing what are the conflicts that may arise, what are the independence issues that may arise. Say it's a large size firm, there may be 20 partners, 10 partners, 15 partners, 30 partners. You're not going to individually ask everyone. So there is a firm led process, firm led procedures, which may be tasked by someone else, right? They will ensure that there are no independence issues. Or if there are independence issues, conflict issues, it is resolved appropriately, right? So an engagement partner is entitled to rely that that independence process is working. Okay, independent policies are being implemented, applied, and they have been followed. Maintenance of client relationship. That also again the engagement team is entitled to rely. Adherence to law and regulations at the firm level. They are entitled to rely that it has been done. Okay, they are not required to check each and every, which could be HR related, which could be general monitoring, inspection, many other things. Okay, I'm trying to take you to a place where you should envisage or visualize a situation where it's a firm of let's say 15, 20 partners at least and beyond, and the audit and assurance function is also 3, 4 partners at least. Okay, so you can visualize that how does any one partner who assigned any particular engagement would be taking care of all these things. It will obviously be other person who will be taking care of it. So they are entitled to rely unless they are aware it is not reliable. In that case, they cannot say that the firm is doing it and I am relying in spite of their knowledge of it. Okay. Now, what is the auditor's objective? To implement the quality control objectives at the engagement level, okay, that provide reasonable assurance. Audit complies with professional requirements, legal regulatory requirements, and the audit report is issued appropriately in the circumstances. Okay, so this is broadly again what I reiterate. Who's an engagement partner? We looked at it in SQC1, so I'll not belabor the point. Engagement quality control review process, we talked about it earlier, but let me belabor this point out here because this is the standard all about. Engagement quality control review is a process to provide objective evaluation before the report is issued. Okay, for significant judgments and conclusions reached by the engagement team in formulating a report. Okay, so the engagement quality control review process typically involves looking at the client acceptance continuance right from that stage, from the initial stage, client acceptance and continuance to risk assessment, right? At the acceptance level, at the continuance level, then the risk assessment at the financial statement level, at the assertion level, planning, materiality, okay, addressing those risks, then the work performed, okay, observations, conclusions. Obviously, it sounds too tedious. It sounds probably that the EQCR reviewer become an engagement partner. That is not the case. They're not supposed to reach or look at each and everything with the engagement team has done. But the significant judgments and the conclusions that they've reached and how they reach the conclusions, those are important matters. Okay. In addition to looking at planning, risk assessment, materiality, those are the broader contexts. You don't need to look at each and every work paper, each and every document, okay, to come to this conclusion. But the significant aspects definitely need to get into and look at if you're an engagement quality control reviewer. Okay, so who's an engagement quality control reviewer, or who can be an engagement quality control reviewer? An engagement quality control reviewer can be a person within the firm, outside of the firm. Okay, that person has to be suitably qualified. the person within the firm, partner. Okay, could be other person also who is not a partner. But then what will happen is there will be a question of authority to challenge. Is that person able to challenge, right, the judgments, the conclusions reached by the engagement team? Are they having a free hand to do so? Is the process such? So you typically have an engagement quality control reviewer who is more or less of the similar stature as the engagement partner. I am using my own words. Huh? These are not words which are used in standard. I'm just giving you an indication on an idea. So with sufficient experience as the engagement partner, because you can't have a junior partner or junior person questioning senior, because they'll obviously be overwhelmed and they'll probably differ depending. Okay, likely to, not necessarily always the case, but likely to. Okay, they might bow down in that sense, bogged down to a certain extent. Okay. So again, to engagement quality control review has to be a partner or other person in the firm. Suitably qualified external person is also okay, with sufficient and appropriate experience and the authority. Experience and authority. Okay. To objectively evaluate significant judgments and conclusions reached. Okay. Before the report is issued, obviously, it can be post facto. It can be after the report is issued. That is just for documentation, just uh, falsification. You're not wanting to show a document for the sake of it, that you are complied with the process. That is unacceptable. It has to be before the report is issued. In fact, like I mentioned earlier, it has to be concurred by the EQCR partner. Okay, that you can issue the report. That's how it is. The quality control team, if there's a team, if it's not a single individual looking at it, there's a possibility. There are large size clients or large size engagements, right? Multi-location, complications and complexities involved are also such. There are so many significant matters. So you might have a team of quality control. Okay, not just a single individual, but it has to be led by a chartered accountant, member of ICI. It cannot be a non-ICI. You cannot get away saying that a team member is a CA, but the head taking a call is non-CA in that case, as we all understand. Okay, engagement team, we already looked at it earlier. I'll not belabor the point. All personnel performing the engagement, outside experts also included. Internal audit of the company not included, even if you're relying on their work. Okay, it could be a firm, sole practitioner, partnership. It could be any other entity allowed by the law. Okay, corporation is not allowed as of now. Then there's inspection of completed engagements. Okay, how do you perform engagement quality control review? How do you monitor? Those are two different things, right? Monitoring is one of the elements of SQC as we looked at earlier. And how do you perform this one? Okay. EQC is applicable mandatory for all listed entities. Beyond that, the firm may lay down the criteria, may lay down the parameters. Okay. So as to whom EQSR will be applicable. There are many criteria. Other than listed entities, it could be industry related, it could be the size, it could be the nature of the entity, it could be the complications involved in the particular entity, depending. So that is left to the firm to decide. But listed entities applicable all across. So even if it's a sole proprietor, right, auditing that listed entity, they are required to get an EQCR done. It could be from an external party, external person, but they're required to get that done. You can't say I'm an individual or sole proprietor, so I don't need to have an EQCR done. Okay. Now coming to, again, sudden overlap between SQC1 and SA220, leadership quality, leadership responsibilities for quality. Okay. Let me rephrase and let me repeat myself again. Leadership responsibilities for quality not. This is at the engagement level. That was at the firm level. Okay. So mind you, many of them appear to be overlapping and many of the concept is the same, but this is at the engagement level and that is at the firm level, SQC1. So at the engagement level, it is the engagement partner who's responsible for the quality. At the firm level, it is the managing partner. Okay, one point of difference that I'm trying to mention. Now, what is the engagement partner's responsibility? Compliance with the professional standards, obviously, legal requirements, regulatory requirements, firms' applicable quality control policies. There's an implicit assumption in SA 220 that there are firm control quality policies, which is to say SQC1 is complied with and implemented. Okay, so then compliance with the firm's quality control policies, issuance of appropriate audit report, obviously the engagement partner's responsibility. Then raise concerns without fear, that again the engagement partner responsibility. If he or she is signing off on it, they are supposed to raise concern in the first instance. Quality, it is a responsibility of the engagement partner in engagement performance. They are supposed to oversee, oversight, review, supervise, monitor on the engagement. Okay. Engagement partners, other requirements, ethical requirements. They are supposed to remain alert to any evidence of non-compliance by engagement. Okay. At the firm level, the firm has laid down policies. At the engagement level, the engagement partner is supposed to ensure that the firm or the engagement team rather is compliant with the independence policies. They are supposed to timely inform the relevant concerned person, the responsible person, to ensure firm level independence, and in turn the engagement level independence. Okay, so through inquiry, through observation, there could be conflicts, there could be anything. Let's say, to give an example, there's a team member who has been assigned on an engagement team who happens to have a relative, who happens to have a close relative as a CFO in that engagement. So it is the engagement partner's responsibility to inquire with their team members, assigned team members, if they are in such a situation where there could be a conflict, and then pass on that information to the firm to appropriately take care of it, mitigate it. Okay, so the engagement partner's responsibility for that. Then actual indication of non-compliance, if there are any, the engagement partner should communicate, consult others in the firm. Okay, determine the appropriate action plan, obviously in consultation with others, but final responsibility for taking a stand or call on the engagement level, it is the engagement partners. So we got through again leadership, ethical requirements, right? Client acceptance and continuance. Again, at the firm level, we already said, but when the engagement is being accepted, and typically what happens is, in a situation, a client comes in through a particular person, and that person typically becomes an engagement partner for ordering assurance, right? Typically, that is how it is. So in that case, particularly, the engagement partner is responsible primarily for client acceptance and continuance also. There are obviously firm policies which have to be, complied with, as the case may be, but the engagement partner would be responsible in that case. There are also cases in bigger size firms where the client has been accepted by other set of people and the client has been assigned to the engagement. The engagement partner has nothing to do with the acceptance and the continuance, right? But they will have to still give their own feedback and they'll have to go through the process, the firm's quality control process, right? And the procedure. Engagement team assignment could be in consultation with the engagement partner, could be otherwise, could be assigned, could be completely based on what the engagement partner wants, or could be otherwise, right? But it is finally their responsibility that the engagement performance is as required as per the standards and the firm's policies. Okay. So engagement performance, we saw earlier in SQC1, again, the direction, supervision, review, monitoring, difference of opinion, consultation, engagement of quality control review, all of this engagement partner is responsible for looking at the engagement level. Okay. So let me come back to the now issues to be addressed by the engagement partner. First instance, Then we'll come to the engagement quality control review. Work has been performed in accordance with the standards, professional standards, law, and regulations. Significant matters raised for consideration, further consultation as the case may be, right? Appropriate consultation has been taken. It is the engagement partner's responsibility to approach the right people for the consultation, right? Um, you may have a process or protocol in the firm of how to go about it, or it may be left to the engagement partner when it arises. Okay. So need to revise the nature, extent, and timing of the audit test, audit procedures as such. That is the engagement partner's responsibility in the first instance. The work performed, the observations noted, found, the conclusions reached, the judgments reached in the first instance is the engagement partner's responsibility. The evidence obtained, the quantity and the quality, the sufficiency and appropriateness of it, that is the engagement partner's responsibility. And the objectivity of the work performance and the compliance or meeting or adhering to the objectives of the engagement. Okay, whether they've been achieved or not, that is the engagement partner's responsibility. The critical areas of judgment, again, engagement partner, which could be difficult matters, contentious matters, right? Significant risk, other areas with the EP is considering, which may not have been classified as a significant risk, it may be a significant matter as such. So those are all with the engagement partner is responsible, but they're supposed to bring that out in such a way that the engagement quality control reviewer can get into it, look at it, right? So that is, there are some, the engagement quality control is not, reviewer is not required to fish for the things. It's what is done by the engagement partner. So first and foremost, before the engagement quality control reviewer comes in, the engagement partner's responsibilities need to be very clearly delineated, demarcated, right? And that is what we talked about. Then we come to the EQCR as such. Consultation, like I mentioned, EP's response. Now coming to engagement quality control review. For listed companies, mandatory. Okay. For other audit engagement, the firm may determine criteria for it. Okay. And typically there may be many criteria. It could be the nature of industry, it could be the nature of the entity, it could be the size of the entity, size of the organization, the complexities involved. It could be any of the criteria. The firm may decide, as the case may be. Right? EP is responsible for determining that an EQCR has been appointed. Who will be the EQCR partner or the person? Not that. But the person has been appointed. Ultimately, it may be someone else's responsibility to appoint the EQCR partner or the person. Right? But EP cannot say that no EQC was done because no EQCR was appointed. It is the responsibility of the EP to ensure that that person is appointed. The appointment may be done by someone else, but it is the EP's responsibility. So I'm just trying to make that clear. Discuss EP's responsibility to discuss all significant matters with the EQCR. Okay, all significant matters have to be discussed with the EQCR. You can't just say, I've given you the file, go through it. You're required to discuss that, right? And cannot sign off, cannot date the audit report before the concurrence of the EQCR review or a go ahead by the EQCR. Right? That is the engagement partner's responsibility. Now, what is the EQCR's responsibility? The specific responsibility. Significant judgments made by ET. They are supposed to get into it, look at that. Conclusions reached. They are supposed to look at that. Objective evaluation, independently of the engagement team. Would the EQCR also reach or arrive at the same judgment? More or less. Would the conclusion that the engagement team reached have reached be the same as what the engagement quality control reviewer would also conclude? That is the EQCR responsibility. Evaluation obviously involves, discussing with the team, the engagement partner, getting into documentation, review of financial statements, review of work papers, right? Relevant, selected, not necessarily all work papers, like I mentioned earlier, evaluation of conclusion briefs, critical areas, judgments, all of that. Considering, evaluating the misstatements, how is the engagement team evaluated misstatements, what is the conclusion on that, all of that comes in. And finally, whether the audit report is appropriate or not, right? EQCR, additional consideration for listed entities. I just mentioned that. Evaluation of firm's independence. EQCR is supposed to look at that. Primary responsibility is the engagement partner at the engagement level. Firm's responsibility for setting up that policies. EQCR to look at it for listed entities. That independence has been maintained. Okay, there are no independent issues as such. The ET will, EQC will have to get into it. That the ET has done it. Okay, whether appropriate consultation has taken place. If there are matters which need to be consulted, whether that consultation has taken place, and whether it has been done in to the right person, basically appropriate consultation. Audit document is maintained in the way it is required, professional, as per the professional standards. Okay, it reflects all the work performed. It reflects the significant judgments and conclusions reached. Okay, that is what the EQSR is supposed to look into. If there are differences of opinion between the engagement partner or the engagement team, as the case may be, and the engagement quality control, there has to be a policy and a procedure which is set by the firm. Then what needs to happen if there's a difference of opinion? There could be first instance within the engagement team also. The engagement team may have a different view as compared to an engagement partner. There could be an engagement team which is large enough to have probably more than 2 partners or more than 1 partner, right? In that case, there may be difference of opinion between the 2 partners also. In such case, how does it need to be addressed or tackled, right? Then you may have a difference of opinion with those consulted. If you're taken up a matter for consultation, you may have a view, and consulting party may have a different view, or consulted party rather may have a different view. Then between the engagement partner and the engagement quality control review, again, a process needs to be put in place as to how that will be addressed. Okay. Monitoring. EP shall consider the monitoring deficiencies noted, results of the firm's monitoring process at a broader level, the peer review, any other independent monitoring which has been done, the weakness areas, whether those reflect back in these engagements, how that has been taken care of. That is the EQCR responsibility to ensure that any identifications or observations or findings of deficiencies at the firm level, how is it being taken care of at the engagement level? It may not be present at the engagement level as such, but if it is present in other engagement at the firm level, then that is something which needs to be looked at and considered at the engagement level. Obviously, documentation. Engagement quality control review process has to be documented right from the beginning. What were the documents reviewed? Processes reviewed, the judgments that you looked at, the conclusion that you reached. Okay, all that has to be documented. You just can't say I concur with everything that is there. Even if you have to say, you have to state it very clearly. The days when you have done it, okay. So it has to be very clearly. The documents which you review, that also will have a sign off, EQCR sign off. In addition to the engagement team's sign off, it will have an EQCR sign off, right? So documentation is important. Again, same principle applies. Not documented is not done. At the engagement team level also and the EQCR level also. So the recent lot of orders from NFRA has got the EQCR on that mode also for documentation, lack of documentation, where the EQCR is mentioned or represented to NFRA, there also the documentation is missing. Okay, so obviously they have come, what do you say, come to the conclusion it is not done. Okay, so this is it, sum and substance of SA 220 and SQC1. If there are any questions, I am more than happy to take it right now. If anyone has any questions, they can reach out to me separately later if they feel so. But again, let me reiterate, this is all available in terms of first the SQC1 the essay on the ICF website. but those are the standards. There's no substitute for reading the standards in its entirety, in its bare form. Okay. Then there's an implementation guide to SQC1. Beyond that, there are other good authoritative material which is issued by ICI, which is publicly available on the website. First and foremost, background material, right, for audit training, which covers all EQCRs in the presentation format, very well summarized. Then there is ready reference of the standards, which summarizes any standard in 4 or 5 pages only, right? Which is after you've gone through the standards in its bare form, you understood it. For ongoing consultation, reference, implementation, guidance, you can refer to this in addition to the base standards and implementation guide. Then there are MCQs which are made available. So you can go through each and every standard, your knowledge of the standard, you can assess, you can identify the areas where you are wanting to work on, need to improve. It could be for your level, it could be at the engagement team level also. Okay. So these are 3 to 4, which is already available on the website. I am done for it. If there are questions, I'll be waiting for the next 5 minutes to get in the questions, and the secretary team can tell me these questions.
Thank you so much, sir, for such a wonderful deliberation. So, on behalf of AASB of ICI, I extend my heartiest thanks towards you for sparing your valuable time and gracing this webinar as a tribute to our beloved Shri CA B Ganesh ji. And you have given your kind consent on a very, very shorter notice. Thank you so much, sir, from the core of my heart, sir. Thank you so much. Sir, I have received certain questions. If you allow, can I go ahead, sir?
Yes, please go ahead.
Yes. So, first question is, what is the role of EQCR in the industry?
I don't think I get the question completely, but I'll try and answer. Probably that person can clarify, or if you can allow them to speak up, then we can take that in that format if it is acceptable.
Yes, sir. Please, sir.
See, EQCR industry, this is EQCR is at the engagement level. Engagement quality control review, as the word says, it's an engagement level. Engagement for the firm's practice, audit and assurance practice. Okay, and EQCR that we talked about, SA 220, is specific and relevant to only audit of historical financial information. So from your word industry, I understand basically you're talking from a outside industry professionals being up. I'm not sure, but this is what I understand. Could someone clarify if the query can be?
Yes, so we have further questions relating to the same. Member is asking, is the appointment of engagement quality control reviewer mandatory only for the audit of listed companies only, or is it mandatory in all the cases?
No, it's only mandatory for listed companies as of now. For any other entities which the firm determines as per its quality control policies, where it needs to have an EQCR. See, what happens is, let me give an example. Banking financial service industry, NBFC. Okay, there's a non-banking NBFC which is of a decent size, and we all know NBFC is also regulated by RBI requirements, and RBI requirements are not only mandatory to be followed and complied with, and it could have issues on your report and on your work, right? So typically, if I am accepting any NBFC client, though it is not a listed entity, I would still want an EQCR process done. I don't want it to be just going through or passing through a single person in that case. I am deciding as a firm, right? It could be for real estate industry, it could be oil and gas, it could be anyone. It could be because of size. There are many private limited companies which are of a huge size, right? Which are having revenues of about 1,000 crores, which are not listed.
Yes, sir.
And I still want an EQCR for that. Again, here the wordings which I used is listed entities, not in the process of listing. There may be some entities which are considering listing over a period of 3 years or 4 years, right? And they may be of a significant size, which I may want an EQCR for. So free to decide the criteria by which they will have an EQCR for other entities.
Yes.
I hope I have answered the question.
Yes, yes. In case of some sole proprietor, can EQCR be an external person? Should he review before sign
He
off
has
of
to.
any audit engagement?
It necessarily has to be an external person in that case.
Yes. And should he review before sign off of any audit
Yes, it has to
engagement?
be before sign off. Any and
Okay.
every EQCR. Let me reiterate once again. EQCR go ahead is required before you sign off. Simple as that. I'm putting it very simply. You need a concurrence of the EQCR person before any sign off. Otherwise, it loses its purpose or objective. It does not meet the objective. Once something is signed off, what can you change? What can you do? आज क्वालिटी कंट्रोल का इशू कब आता है मीन्स क्वालिटी आप पहले चेक करके फिर प्रोडक्ट बाहर मार्केट में भेज दिया उसके बाद क्या रिकॉल ही होता है.
Yes. Yes. So whether engagement quality control reviewer can be the previous person outside the firm?
Previous person outside the firm means let me try
Can
to
be person outside the firm? Outside the firm.
outside the person तो हो सकता है suitably qualified होना चाहिए. So long as that person is suitably qualified, it can be a person who's outside of the firm. It does not matter. It does not have to be internal. Okay.
Yes.
But if I understand correctly, previous person outside the firm, if I understand, let's say it's me. I was handling a particular engagement ABC. Then I left the partnership and moved to some other place. Okay. And now they're wanting to retain me for this EQCR in the next year when it has been assigned to some other engagement partner. Can that be done or not? Okay. Now the question is objectivity. Can I or will I be objective enough in the next year? Particularly considering I had done that audit in the previous year, and there could be some issues and ramifications which could end up on my plate also in the next year.
Yes.
Right? It's not an outright no in such a case where it's a previous person doing it, but you may need to consider its impact on the objectivity. I hope I have answered the question.
G. Sir, whether any format you suggest which we have to submit document to EQCR for sign up, apart from the working folder submitted to him or her?
In fact, there is guidance made available. As such, what are the documentations which you are required to give? More than the format, there are formats which are being used by before. I'm aware of that, right? But primarily, that only states the documents, list down the documents. It will not be a separate document because the engagement team will not have the time available to create a separate document for it. It can be a docket on the top. A docket is only saying this and so file and so person responsible for it with the contact details and everything. The file may be available online basis. File may be shared to you through emails as the case may be.
Yes.
Or the specific documentation may be shared. And again, let me give you this indication. EQSR does not necessarily have to get at the very end. In fact, their requirement is to get into it right from the beginning. Risk assessment is done at the planning stage. So the EQCR, right after the planning is done, they can get into it.
Yes.
As the work is being performed, there are significant judgments and conclusions reached in particular areas. The engagement partner can bring that up to the EQCR at that time.
Yes. Sir, in a similar line, can a junior partner be an EQCR of an assignment signed by the senior partner?
Typically, if you put a junior partner in charge of an assignment done by a senior partner, how do you ensure that they will be completely objective and they'll be able to challenge the authority? That is a problem. And typically, the way it works is most juniors.
Yes.
Right? And
so whether
if the performance evaluation is going to be done by that senior, then how will you ensure that senior is really objective?
Yes, sir. Exactly. Sir, for this EQCR reviewer should have a COP mandatory.
It has to be a member of ICA, bro, who can be in a full-time practice, not necessarily having a full-time certificate, full-time practice COP.
And who should appoint EQCR reviewer? Managing partner himself. If managing partner himself is an engagement and signing partner.
I know if the managing partner is a signing partner, again, what is the firm's policy? Has they set up a committee for, let's say, to give an example, there are big size firms which we have 100 partners or so. I'm talking about before as of now, right? I can relate to it, so I'm giving that reference. There are 100 partners out there, and there are 50 or more partners in audit, and 50 or more partners in other functions, other service lines. There are many more, but I'm just giving an example. So there are 100 partners, and the managing partner is, let's say, an audit partner. And he or she is signing off on, let's say, Tata or Reliance, the topmost. Let's think of that. In that case, but prior to that partner assigning, the firm level policy has to be there. Who will be assigning? So whether it'll be a committee or whether it'll be a person doing it.
Yes.
In such a large size organization, I can have a committee doing
it. Yes.
I can have a 3-person panel, 2-person panel, means 3 or 4-person panel, other than the managing part to do it.
Yeah. Sir, last question. Just member is asking your opinion as well as a gist for this main objective of SQC1 and how does it contribute to the enhancement of the audit and assurance quality with the firm?
See, this is like the base level.
Yes,
the foundation. Yes. Before you actually build up your foundation blocks of the standards,
yes.
engagement level, right? If you look at SA 200, objectives of an audit, if you look at SA 220, if you look at SA 230 or engagement documentation, all take from this SQC1. SQC1 lays down the broader elements and the foundation. And with the standards also have to be laid down as such. And SQC1 is at the firm level, not at the engagement level. Let me reiterate that again. Okay. So at the firm level, how do you ensure that quality is appropriate? Let me give you an example. If you are into a product company, let's say an automobile company, you're a Maruti Suzuki. I'm just taking an example. Suzuki will first put in place in terms of its quality control for all cars generally. Okay. Particular car, particular model, that is at the engagement level. That is at the very small unit level. Okay? That is what SAs are all. But when you talk about it, the firm level, how does the company ensure that the quality is maintained? Right from the beginning, right? Does it have the right type of people doing it? Does it have the right type of monitoring process to take care of it? It can be at the just engagement level. एक product बनाया उसका, unit का, one out there.
Ji, sir. So thank you so much, sir. Now we come to an end. And once again, at the end, on behalf of AASB of ICI, we extend our heartiest thanks towards you for sparing your valuable time for this wonderful deliberation on SQC1 and role of EQCR. And you are always available for the cause of profession, and you always gave your kind consent for this. And in future, looking forward to associate with you for the more contributory webinars as well as the knowledge dissemination activities with you, sir. So once again, thank you so much for your contribution. Thank you so much.
Thank you, and my condolence to the bereaved soul.
Thank you.
Recording.